Good morning. It's Jeffrey Christian of CPM Group. It is about 10:31 on the morning of 5th of September here in New York. I wanted to talk today a little bit about our outlook for precious metals over the next several weeks, several months, and focus a little bit on why precious metals fell so sharply today. First off, it wasn't just precious metals. Very interesting morning. Interest rates and currencies have been relatively flat and unchanged, but the oil price rose sharply, representing lower supply, increased demand, even though it's the end of the summer driving season in the United States and moving toward that way in Europe. But you've had some supply cuts from major producers. But precious metals prices have fallen sharply and the stock market's off sharply. I think that all represents investor views that the economy is doing better than a lot of investors had thought, and that probably will keep interest rates stronger and higher longer than a lot of investors had thought. So they're sort of adjusting their portfolios downward to reflect the higher interest rates. Excuse me. Gold prices about 1959. They got down as low as 1953 earlier, off about $8 at present. Silver prices, $24 right now, off about 50 cents. They got below $24 and it got as low as $23.81. Platinum got down to $9.42. It's around $9.47, which is off $21. And palladium's off $21, $22. It had gotten down as low as $1,182. It's a little bit above 2005. $1,205 right now. So we've seen prices move lower, and that basically is what we have been expecting. You have a number of factors there. First off, as I said, was the idea that you had a stronger economy means stronger interest rates, means every other asset, including stocks and currencies, stocks and commodities decline. That is one of the factors. Another factor is that the September contracts for silver and palladium are active. You had that supporting the silver price and the palladium price last week. That's gone right now. Monday was a holiday in New York. That might have had a little bit of an effect. But, our expectation has been that the precious metals that remain under pressure a little bit longer. We are looking for higher prices later. But what we've been saying for some time is that we thought that they could stay weak into September, maybe even into the fourth quarter. We do expect bottoms sometime in the last 4 months of this year. Gold prices, like I said, 1959. Wouldn't be surprised to see them much lower. We wouldn't be surprised to see $1,920 at some point. CPM Group had a sell recommendation on gold. Then they had a buy recommendation on gold. Last week we said take your profits on your long position and then stand aside because we think the prices will come off. They have come off somewhat today. And we're probably actually instituting a new sell signal later today. 1920 is possible over the next several weeks, maybe not in the immediate future, but over the next several weeks, we won't be surprised to see 1920. If prices hold above 1920, I think that's very constructive. If they fall down to 1900 or even 1880, I think that we're still looking at higher prices later in the year, but it would be less constructive and indicative of perhaps a greater willingness to short gold on the part of some investors than otherwise might be the case. Silver prices, we have been expecting the prices to basically trade sideways like they have. We had issued a take profits and stand aside recommendation last week on silver, and we are probably going to institute a sell sign signal now. The September delivery period is behind the market. There is really no compelling reason for silver prices to rise or fall sharply in the near term. But we do think that on a technical basis, silver prices will move down below $24 again, and will move slightly lower over the course of September before rising later in the year. Platinum we had a sell signal on platinum, and we still have a sell signal on platinum. It has fallen, but not quite as low as we thought it would. We still think that it could fall a little bit lower in the next couple weeks. I think we're probably looking around 1930 as a low for silver. October is an active delivery month, and that could lend some support later in September to the platinum price. That's what it is. And then palladium prices have been falling, and our expectation is that they'll continue to be weak. You are seeing a shift away. Obviously, we're talking about a potential strike in the United States auto industry, the big three U.S. companies, which I should point out, there are 11 companies manufacturing automobiles in the United States now. The big three U.S. companies, well, Stellantis is now owned basically by overseas companies, is basically an overseas company, but the big three traditional U.S. manufacturers are all facing strikes within the next couple of weeks. That obviously would reduce short-term requirements for platinum and palladium and rhodium and auto catalysts. And even if auto companies don't pull back from manufacturing those catalysts, the market probably would push the metals prices lower on the idea that the auto industry would be using less platinum, palladium, and rhodium during the strike. Hopefully a strike will be avoided, because an industry strike at this point in the economy could be very detrimental for the overall economy. As with other metals, we do think that the prices are probably getting close to their lows. We think that the palladium market has, fundamental weaknesses relative to platinum, and platinum and palladium together have less likelihood to rise very sharply over the next 2 or 3 years compared to gold and silver. That's what we have right now. Have a good week. Take care of yourself. Take care of people around you and institutions around you, and try to help the world. I'll talk to you on Friday.